Everyone, good morning. Good morning, guys. Welcome to the exciting session here on our morning market review. So, what we do here, we try to analyze the market every day. I mean, trading days, Monday, Tuesday, Wednesday, Thursday, Friday. We run through the market, run through currency market, commodities, metals, energy, and all of that. Even commodities market to give you tips and tricks on how to navigate the market profitably. My name is Emmanuel. I'm here with you guys, but we have just few numbers, right? So let me just give 2 or 3 minutes for more persons to join us because what we're sharing is valuable. So I think we need more numbers. So I think Hassan, I can see you there. You said, "Good morning, traders." So let me reply, "Good morning." All right, so 2 to 3 minutes, okay? So we're going to start. Thank you very much, guys. See you again in the next 1 to 2 minutes. Thank you. Okay, guys, I think we can kickstart right now. Once again, welcome to Random Trade Money Market Review. We do this every day, Monday to Friday. For joining us. This is Emmanuel. So for another exciting section here, join us tomorrow again for another exciting section. Every day is always an exciting section here. Different speakers, one go analyzing the market, giving you tips and tricks on how you can be profitable, giving you previews, reviews of what the market has done. Remember, we now have Trump. Come on, guys. Trump is always moving the market for us. So we are in days of high volatility, days of the market moving straight in your direction and also moving against what you think will happen. So always be guided, okay, on your trade with stop loss and take profit, even use trailing stop, okay, to maximize profitable trade, to maximize trade. So guys, I believe you can hear me. Little sound check here. Get to the chat room. Tell me I can hear you. Emmanuel, I can hear you. So guys, I'm waiting for that. Just the next 2 to 3 seconds, we should be good with that. Get to the chat room. Get to the chat room. I can hear you, Emmanuel. Little sound check there. So just like we do, I will share my screen right now. We look at the fundamental event. Thank you, Chinedu. I can see you there. Thank you. So we look at some of the fundamental events that can drive price, that can move price. Then afterwards, we just go straight to technical analysis. That's what we do here, and that's been profitable for the records. So let's do that right now. Thank you. I can see you also. Good Friday. Nice name there. So quick one here, guys. I've been able to share my screen. You can see my screen. So I am on Forex Factory. So there are several websites. If you're joining us for the first time, we always have new person joining us, okay? Remember, we are combing the entire states all across this region, of course, the entire Nigeria, trying to get more persons preaching the gospel of e-trading. It has been good, man. It has been changing lives. Positioning yourself on the profitable side with the good knowledge about how trading works will make you a living. So I have shared my screen. We are looking at Thursday, 23rd January, blessed day of the Lord, 2025, guys. So if you want to look at the activities for a week, then you want to click on this particular button called calendar, right? It opens it up. But if you just open the website still, it takes you to the events for that particular day. So we're interested in volatility, right? We're interested in the impact of the market. What's the market going to do for today? So that's why we're coming here. So we want to have an idea, even though not 100%, right? It doesn't give 100% of what it will do, but it will give us a great deal of what the market do. Like example, on the currencies pair that are marked as high impact, right? So when we come here, our focus is on the impact. So we just look at another word for this word, another word for this in of every trader, right? We need the market to move, right? But at a point, it becomes a two-edged sword. but we just need the market to move. We just need it to move. If you move up to 30 pips, 80 pips, 150 pips, come on. That's what we want. Just like what Euro JPY did yesterday. It was just skyrocketing. I'm sure most of you caught that move. So one of your job as a trader is to be scanning across instrument currency pair, to be looking out for instruments that are just about to start a new trend or that is continuing the existing trend. That's your job as a trader. You open several currency pairs, especially the major currency pair or the major courses. You are scanning and looking out for instruments that is just about to start a new move, or very important. It's even more important than anticipating a reversal. Now. See, you need to get this right now. Look out for instrument that is just starting a new move or middle of a move. Is even far more better than anticipating a new trend. Now, we anticipate on the market, which is quite good, but it's also better and best, right, to trade what you see on the chart. So you trade what you see. Now I'm already talking about technicals, but let's finish with these fundamentals. So for today, this is what joining us for the first time, date here, time of the day, currency it will affect, and of course the volatility of the impact, the caption of the news, the actual forecast. So our focus right now is on the red, right? The high impact news. So for today, we'll be having the retail sales month on month, as the core retail sales from the Canadian dollar there. So by 2:30 p.m., those of us trading USD card, JPY, NZD card, any of the card, you want to look out for that, right? You want to look out for that. Want to look out for this news by 2:30, retail sales from Canada. So this one measured the total retails, the total sales at the retail level, right, in Canada there, right? So these developed economies, they have a way of measuring it to know whether the economy is really climbing. Consumers are confident about the market, whether are they really buying things. So that's the retail at the retail level, right? So with these numbers, we can know whether the economy is booming or the economy is crumbling, right? So because if people have money in their pocket, of course, they will purchase things, they will purchase what they need, and that is what we call retail, right? So the retail stores will do well, sales will go up, and of course, the economy will do well. So that also gives you a signal of inflation, right? That's also gives you a signal of early inflation because the more they buy, the more prices can skyrocket, right? So that's what this information is about. So look out for it. to show you a green or red, right? Tell you what is happening to that particular instrument. Remember, it's Canada. So any of the currency pair that has to do with Canada, it means by this particular time, you should be expecting some level of movement, right? So what you need to do is just use your technicals to analyze the market and of course stop loss and take profits, then you'll be good to go. Then we have unemployment claims by that same 2:30 p.m., right? So this one is a weekly report, right, from the US, unemployment claims. Remember, I think when Trump was power the last time, we really missed Trump all throughout Biden. Now Trump is in place. Look at just look at that 5 p.m. news. It's President Trump speaks. Oh my goodness. We hardly see this. We hardly see this when Biden was the seat of power, right? President Trump speaks, and this guy is a market mover, guys. Mm. And it is and he's always bullish about his economy. I mean the U.S. economy, and that's simply the U.S. dollar, right? Being strong, right? So all policies, foreign policies, even local policies that will make the dollar to be strong. That is what this guy is after, right? Right now. Of course, that was why they voted him in. Okay. So by 5 p.m. today, guys, we'll be expecting some rumbling on the market. Remember on USD. So just take note, your trade should have stop loss and take profit. Okay. There is nothing as sweet as having a stop loss on the trade and of course a target. Uh, okay. So because you already know the end from the beginning. That's how we trade. We trade by knowing the end. Place the trade, put the stop loss, you already know the maximum amount of money established. You already know the end of the so of course we have a okay. So I will check. I think we have good numbers now. Can you see my chart? Okay, you see the line is breaking. Okay, is it breaking? Ecolanus, you said the line is breaking. Is it breaking now? Is it breaking? Those of us just joining us right now, I can see we have good numbers right now. This is our morning market review. We'll do this every trading day, Monday through Friday. One solid hour of market analysis. We'll give you tips and tricks on how you can navigate the market. This is Emmanuel. Chief for the beautiful city of Benin. Benin is quite beautiful today. If I was some family in Benin, I'm in Benin right now, storming the place with our uh, is getting friends to come come and join our seminar. So if you have friends that are them up, okay? So this So you guys have been able to connect on another network. Let me know if you can hear me now. Can you hear me, guys? I've connected to another network. I think it's better now. So let's ride on. So this is USD index, and of course, this is the chart. This is H4 time frame, right? So this H4 time frame, we saw the dollar trying to move to the upside, as you can see right here. So there are signs already that the dollar is moving up to the upside, as you can see. Thank you, thank you, thank you. Say better than before. So there are signs that the dollar is trying to move up to the upside. So we got some relatively equal lows right here that the market was able to smash, right? So the market smashed that low and got to a lower low, right? Smashed that low, got a lower low, and then the market is trying to move up to the upside, as you can see right here. So I believe this is actually a movement to the upside for the dollar. That's what I believe, right? So this is the level the dollar have to crush. So I'm looking at the dollar crushing this level between now and next week, right? So it can even happen today, Thursday, or even tomorrow, Friday. So I'm looking at the dollar crushing this level. And if the dollar should do that, then we now have a shift in the market direction. Even though if you look at the 1 minute time, if you look at the 1 hour time frame, we're already having that shift, right? So if you look at the 1 hour time frame, that shift has already occurred, right? So this is the shift right here, right? So we already have the shift. So this is that shift, right? So the market has already gone through that shift, right? So that means the 4 hours have actually the 1 hour time frame have shifted to the upside. The 4 hours is yet to shift, right? So the question will not be which of the direction are we following, right? So, but because of we have seen a shift already as a retail trader, retail trader want to look more at the 1 hour time frame, right? So because we have seen a shift, and of course the market gave us relatively equal lows and smashed it, then of course remember we got a gap up here, right? Which is a pressure pushing to the upside. And of course, after that gap up, the market want to do what we want to cover up that gap, and which it did. It covered up the gap right here with smashing this relatively equal lows, right? And of course, it has it has already tapped the target liquidity below that's resting below this low, right? So of course, we have enough reason to think that the market is about now to move up, okay? We have enough reason. And of course, the market have done what we call a shift in market structure, because if you look carefully, the market have moved up to the upside. This is an impulse to the downside. This is a retracement again to the upside, right? So if you want, the market have smashed this protected liquidity, which is supposed to be protecting, but the market is hungry enough for it, so it has taken it, because this is the protected liquidity, you have taken it. This is target liquidity that you have taken it, and now it has equally taken the protected liquidity. So, okay. So right now, we have this low resting here as a protected liquidity where the market is trying to protect, and now the market is trying to move to the upside. So my forecast is the market will come and take out this high, because this high is a very important high. It's a strong high that have to be taken for us to have more assurance that the market is going up. So this is USD index, which means this we are trying to analyze the dollar itself, right? We are trying to see what what um, what kind of strength, or the strength that is in the dollar, right? So, but because of this speech by Donald Trump, right? So that speech may just be very hawkish. I mean, strong enough for the dollar. That speech may just push dollar even higher. Okay. So if it pushes higher, so this is my this is the level I'm targeting. I'm targeting this level 108, right? So the market should be able to trade up to 108. So it can happen today or even tomorrow, but this is the level I'm targeting. Then of course, once it reaches here, I'm expecting a retracement to the downside before breaking it, okay? So the market should trade up to that level, right? So we have done USD index right now. That means we are trying to see, we are seeing some kind of strength in the dollar, technically on the chart. Remember I said, you are to trade what you see on the chart. Trade what you see on the chart, right? Trade what you see on the chart. Trade more of what you see on the chart. What are we seeing on the chart? We're seeing some kind of strength coming into the dollar. So let me do Euro USD real quick. So for Euro USD right now, guys, on the 4 hours time frame, what can we see? 4 hours seems to have broken. Now, if you look carefully, this is the high that broke this low to form a new low, right? Okay, so this high becomes or turned into our target, turned into our a strong high that needs to be broken, right? This is a strong high that needs to be broken. If you look carefully, this high also coincides with this other high. So therefore, I can draw this my rectangle like I always do, right? I can draw it this way, right? That shows that this level seems to be a very significant level on the chart. It's a significant level on the chart, right? So that means it's a significant level, an area of interest where it may just be difficult for the price to break through, right? So you can see my screen, right? So one thing you should always do on your chart is once you grab your chart, you're looking at your chart, it's money you want to make. So simplicity is key, right? To making good money. Complexity can derail things, and of course push you aside in the way of making profit. But simplicity is key. So once you draw this kind of thing in your chart, it makes it easier for you to understand what is happening. So it means this level is a level the market is testing to break. Once the market, if the market can break this level, then of course we are going up. So in trading, try your best not to fall in love with any side, right? So in trading, try your best not to fall in love with any side, any side, any side, any side. Try your possible best not to fall in love with any side. So just analyze and allow the market to do its thing, right? So that is what we call expectation management. So most traders go through the challenge of the market always smashing the expectation. I mean, and by smash, I mean not trading according to what they think, okay? Why? Because they are not keeping an open mind. They normally think the market should only do what they think or what they analyze. The market is not obligated to do what you think, sir. And it is not obligated in any way. The market does not know. Oh my goodness. The market does not care. It doesn't know you. It doesn't know me. The market is too big. So it's not obligated. So the market, so keep a free mind. The market can do this. Otherwise, it can equally do this. You analyze like that, right? So, so this high, right? If you watch carefully, this high, the market has traded above this high. But guess what? This high is not standing alone. So there's another high just close to it, because I can see one of the comments there. If Euro USD have not smashed that high, right? So this high is a complicated high because this high is not standing alone. If you just look around it, there's another high here, right? There's another high here. So that means this whole entire region is a very strong level for the market to break, right? So I can even expand it like this. Mm. It's a very strong level for the market to break. Excuse me. So now, if you watch carefully, you can see that the market has traded above this high, right? So that would mean a change or a move to the upside, right? Mm. But for me, on this particular instrument now, I'll be more bearish than bullish, right? Because the USD index we just analyzed, we saw some strength moving to the upside, right? So I'll be more bearish than bullish, right? So I'll be looking out for more opportunities to trade to the downside than even to trade to the upside. I will only trade to the upside if this barrier is taken out. If this barrier is taken out, that's when I can trade to the upside. Otherwise, I'll be looking out for opportunities to trade to the downside. Okay, so I will only trade to the upside. Let me repeat myself. I will only take buy trade, right? If the market has traded well above this level, and that level is 1.04, right? So, and I'll only wait for the market to trade well above 1.046, right? So if the market trade above 1.046, that is the only time I'll be looking out for a movement to the upside, right? But for now, I'll be more bearish. So I will just look out for opportunities to sell, right? The market should be able to give us opportunities to sell. So one of the ways you can see opportunities to pick a trade is if you're analyzing on a higher time frame, you drop down to a much lower time frame, then there you should be able to see some resistance and support. I mean, local resistance and support that you can rely on, okay? So let me move down a little bit. So let me move down a little bit to maybe 1 hour time frame so that we can see clearly and see what is happening there. This is 1 hour time frame, right? So on the 1 hour time frame, we can see a local support here that the market is trying to trade below it, right? You can see a small support here, right? On this same 1 hour time frame, I can equally see something. So I can see a fair value gap, right? That the market have smashed it, use it as support, and now it's trying to trade below it so that I can now use it as a resistance to go down. So I saw this fair value gap around here. This is where I saw it, right? So the market respected it, smash it, use it as support one, support two, and now the market is trying to smash it there so that I can use it as a resistance to go down. I don't know whether you understood that. Let me explain again. This is a fair value gap here. Now the market is trying to boost through it so that I can use as a resistance to go down. Okay. So that means I'll be looking now for a sell opportunity. And like I told you on Euro USD, I'll be more bearish than bullish. I already told you that. So I'll be looking out for opportunity to trade to the downside. And that's like how many pips now? Is that 45 pips I'm seeing there? So for today, we may not analyze too much instrument, okay? Uh, Like I told you, I am in Benin right now. So you can send your guys that wants to learn how to trade, tell them to come down to call my number or drop my number, okay, so that they can join our event here and trainings here, so that so this is about 49.50 pips, right? So I'll be looking out for a sell opportunity around here, guys. So like I told you, I will not buy until this high is taken out. I already mentioned that, right? So for some of you, you may want to even screenshot this. If you're joining this particular section with your phone, screenshot this. If you're joining it with your laptop, also screenshot it so that you can understand the way we normally analyze these things, right? So can you see all of these drawings I did on my chart? They make the life easier, right? So let me drop down further to 15 minutes time frame, right? So you can see the market is testing this area, right? It wants to break through it, right? It wants to break through it. So I'm looking out for that break. And I'm looking out for that break. So once the market breaks through it, then I should be selling. So what do I need to see? Listen to this, sir. What do I need to see to show that the market has broken through it? So let me even dive deeper. So the way I analyze here, I try to explain it better and better. So that normally takes a lot of time. But at least once you grab the explanation on one, you can take the explanation across other instruments, and of course you can do it. So this is where the market is stylishly showing us that it is already building lower lows, right? Because the market will always tell you what is happening if you can pay close attention. So this is a low that is lower than this low. So I will need this market to smash this low before I will start selling, right? So once I see the market smash this low, so I expect it to go up again around here. So the next time it's coming down, you should be able to smash this low, then I'll place a sell. So that means I can trade just below this level. So that means I'm looking out for a sell opportunity around this level, right? So but I need the market to smash this low, The market should smash this low. And that low is somewhere around 1.038, right? So it should smash this low. Then I'll be looking out for a sell. But for now, I am not buying. I refuse to buy. I refuse to buy. Except you want to do a scalping. But why would you want to scalp? If you want to scalp, it means you should be looking at the lower time frame. The lower time frame, the market is already building lower lows, lower lows are opportunities to sell. If you look at my moving averages, which are 50 and 21, right? Okay, so you can see that it is already sloping down. So the market is already giving you insights, opportunities to sell. Mr. Sam, you're saying, can you, okay, Idris is saying, please do analyze USD JPY, sir. Okay, Mr. Sam is saying, can you do such an analysis with a 15 minutes time frame? Yeah, I am on 15 minutes time frame, but if you notice, I didn't start for 15 minutes time frame, right? So I was able to get my directional bias on the 4 hours time frame. Then I moved to 1 hour time frame to get more information because the time frames, especially lower time frames, are for detail. And then for 1 hour time frame, I moved down further to 15 minutes time frame, looking out for entry. So 15 minutes time frame is actually an entry time frame. I'm looking out for the best time, the sniper entry for this trade. The market has given us a low here. I'm looking out for a break out of that low so that I can start selling, right? The market should break the low. But for those of us very aggressive, you understand what I mean? If you're aggressive enough, you should be jumping in. But then wait for the market to break this low, please. So I am done with Euro USD. Sorry, I took a lot of time analyzing Euro USD. But remember, I told you I will give you tips and tricks, right? So, but as the world is going on, I'm sure you were able to get the tips and tricks, right? And I'm sure you were able to get your catch-up moments. I'll give you tips and tricks. Oh my goodness. So, like I always do, like my custom is, I will analyze Euro USD and of course do GBP USD. Now, Euro GBP USD are pretty much showing us the same kind of price action as you can see. So you can just copy and paste those analyses here, and then you'll be good, guys. Pretty much giving us the same price movement here. As you can see right here, let me even use that same. I think that was is it clean? So we even without looking at the name, you would think it's the same instrument, right? Mm. So in the same way, I'm still bearish. I'm still bearish. I'm more bearish than bullish here. Time will not permit us to start drawing those rectangles we saw. So these are the areas the market should be able to smash. And these are my target areas where I wish the market to drop to, right? So on Euro USD, we measure about how many pips now. So this is a support the market is struggling with. And almost the market is trying to break through it. Right to the downside, send to the downside. How do I mean? This is a support, but if you look carefully, you should be seeing some lower lows. So if you look carefully, this is a level of support, right? And the market is bouncing off this level. But if you look carefully again, you should be able to see some insight. What do I mean by insight? Even though it's bouncing off this support, it is forming lower low, lower low, lower low, lower low. Come on, guys. It is visible to the blind that this market is about to pump to the downside. We just hope Trump may just give it some more fuel to move it further to the downside. So you should be looking out for your sell opportunities anywhere around this area, right? For an aggressive entry, you can enter, but without an aggressive entry, wait for the market to break through this low. But remember, we are all selling on Euro JPY. So you have the directional bias right now. Directional bias on Euro on GBP USD right now is to take sales, right? Is to take sales. Is to take sales. Why? Now, this particular sales is for day traders, like, right? Now, even if you're a swing trader, you can see taking the sales. That's about how many pips now? Up to 60 pips, 50 pips, which is good for good business, right? If you're trading with 0.1, that would be $50. $50 is manageable, right? If you have, let's say, $200, $300, $500 account, or even 500,000 naira. If you make $50, that's a good profit. That's somewhere around close to 90,000 naira, if not even 100. Okay, let's say 90,000 naira. So that's manageable, right? That is good enough. So I think we have done USD, GBUSD. I'll move right now to, I think I have one request, one humble request. And that's from Idris there. He said, let's do USD JPY. I would also love to analyze Euro JPY, right? I saw a good move on it yesterday, and of course, it was skyrocketing, touching all the levels. Euro JPY, Euro JPY, Euro JPY. Now, where are you? No, US JPY, right? You mentioned US JPY. You mentioned it. You mentioned it. This is it. This is that move of yesterday's beautiful move. And before yesterday, it has already done the shift. Anyway, we'll come back to it. So, it is that you want to trade USJPY. Oh boy. Oh, you have a trade on it already, right? So, guys, this is USJPY right here. So, clearly speaking, let's look at it on a H4 time frame, right? So I think Mr. Sam, you actually dropped this request, and yeah, I'm honoring that your humble request. So we got a what I call rare, right? Relatively equal low, yeah, relatively equal low, right? And if you watch before the market went up, the market took out the target, the liquidity that is resting below it, right? but that is still a target liquidity because remember we traded to the downside here, right? So that means once you trade to the downside, the target liquidity are now resting below the lows. So you may want to write it down. Immediately the market trade, immediately the market broke any structure, down structure, up structure, let's be specific. If the market breaks a down structure, is immediately the target liquidity has been shifted to the downside and made below the lows. If the market breaks any up structure, by up structure, I am sure you understand what I mean. Immediately the target liquidity is shifted above the highs. I mean, above the recent high. So right here, the market broke this down structure. Target liquidity is shifted below. So that means this is actually a target liquidity. And if you want, before the market actually caused this shift in the market structure, we already have, so there is already a shift right here, or a sign of shift, if you like. Now we already have the market giving us or smashing these relatively equal lows and even tapping the liquidity below it. So that means if it's tapping liquidity below it, that means it is already thinking of going up, sir. It's thinking of going up. So the analysis of the H4 time frame, as you can see right here, is market structure analysis, and of course, it's analysis that is anchored on the lows and the highs of the market. So clearly, we can see that the market is trying to shift to the upside. Right now, this is the high we had before this low. Now, this high has been broken. The market has traded above this high. So I think the market is showing us signs of it moving upward. This H4 time frame, we're already seeing signs. Don't forget the analysis we did on USD index. So let's go to H1 time frame and see what the market is showing us there. On the H1 time frame, we can see that the market, now let me even extend this, okay? Let me extend this, right? So this is a high. So the market is actually smashing these highs, right? It's smashing these highs. So can we say the market has broken this high? Of course, it is almost trying to do that, right? Because see, we have actually closed above it. This is a bullish candlestick that closed above it. So for me, I'll be looking out for buy opportunities right here. We analyze the USD index. We saw some strength in the dollar. I'll be looking out for buy opportunities. But don't forget, if the market wants to buy, the market will need a discount price before it can buy. So the market can trade a little bit to the downside before it can start going up, right? Don't forget, if the market wants to go up, the market will need a much lower price. If the market wants to go up, the market will need a much lower price before it can go up, right? For example, see here, it traded lower before it can start trading upward again, right? So I'll just look out for these levels, right? So this is a support level. So support level are areas where I can think of buying, right? So this is one area where I will be bullish on USDJPY. I would like to be bullish. This is another area. So once you have all of these areas on your chart, what you do is you set pending orders or you sit and wait for the price to get there. You sit and wait for the price to get there. So these are areas where I will be bullish, right? So I think even right now, the market is trying to bounce off my moving average, right? So the market bouncing off my moving average is also another opportunities for me to enter the trade. So I've been able to paint out some opportunities for USD JPY right here. So these are areas 1, 2, 3, right? The closest of them is right now and right here, almost, oh, the price is almost where you should be able to enter the market. So that's for Mr. Sam there. So let me look at USD Euro JPY. I'm doing Euro JPY because I think I saw a good move on it yesterday to the upside. Euro JPY, guys. I want to do Euro JPY. So guys, this is Euro JPY. So if you look at this Euro JPY very well, you can see that Uh-oh. If you look at Euro JPY very well, you can see that the market was actually on a downward trend before it actually shifted to the upside. So this is where it actually went through that shift, right? So one of your job as a trader is to be looking out for this shift, right? So this is the high, right? Because before this high, we were trading lower and lower and lower. So the market shifted to the upside by by trading above this high right here. Then from that day, which day was that? 17th January, market started trading up. So that means we have now officially entered an upward trend. So Euro JPY is officially on an upward trend. So you can call friends and family members to say, do you know Euro JPY is on an upward trend? It means you should be looking out for opportunities to buy, right? So the first thing you want to get as a trader is to get your bias. Once you have your bias already established, then you can now start looking out for opportunities to trade your bias. So Euro JPY is on an upward trend. It means I'll be looking out for opportunities to buy. Now, don't say, but it's selling right now. Now, no, the market, before the market will buy, the market will create opportunity for that buy. Opportunity for a buy is for the market to offer discount price. Sir, you should understand discount. Discount means low price. So that means the market will have to trade lower and get to a particular level where the demand is high for it to pick up again. For example, this is a level where it stopped, right? This is a level where it stopped. So if it was this candlestick came down and down to this area, now it's trying to pick up again. So picking up again, you should be able to trade even much higher. So your job is once you identify the directional bias, your next level is where are the possible or the precise position to take this trade. So this is another area right here, right? This is another area where the market can drop to. So these are areas where if the market drop to this area, being that my directional bias is still up, I'll be taking buy opportunity on, of course, the opening price. Don't forget, opening prices are very strong areas of support and resistance where the market can actually switch and turn to, right? To the opening price. So I'm just trying to align this opening price, right? So these are areas where I'll be looking out for opportunities to do what? To buy. Don't forget, even if you are the fan of trend lines. Uh-oh. So if you're the type that love trading the bounce, right? So you can trade the bounce. I have a video on that. You trade the bounce. So if you like to trade the bounce, if you put your trend line right here, you can see clearly that the market is actually trying to respect our trend lines, right? So don't forget, if a particular trend is too steep, by steep, I mean, if a trend is trading above 45 degree, I hope you understand what I mean by 45 degree. Don't say Emmanuel is bringing mathematics to this thing or bringing technical drawing. But guess what? In school, I so much love drawing, man. AutoCAD, ArchiCAD, doing technical drawings. So guys, if the market is trading above or somewhere around 45 degrees, it means it is too steep, right? So the market will need to do a good retracement to balance up that movement, right? So I'm trying to say this market should be able to retrace very well. This line I do right now is somewhere around 45 degree. So this market will need to retrace into this area or this area, right? So if you draw your Fibonacci from this low to this high, you should be able to see that the market has enough movement. Where is my Fib? Should be able to see that the market. Oh. So this particular area I pointed out is actually my 61.8%, right? Uh-huh. So this market should be able to retrace into 1, 2, 3. So these are the areas the market should be able to retrace in. Then of course, let's do gold right now. I have good. Okay, you're asking the platform, right? This is MT5. This is MT5. You're asking the platform. This is MT5. Say kindly analyze gold, Mr. Sam. There you go again. So let's do gold right now, real quick, guys. So this is gold. Remember, as a trader, you don't want to joke with your money. especially in this Tinubu regime. So what you need to do is you have to be clear about what you're doing. How do you become so clear, right? So analytical in trading, such that you don't just trade by impulse or you trade by emotion. You don't trade by impulse. I feel like buying, this thing is going up, or you see a blue candle, a red candle, you want to, no, you don't trade like that. So how do you trade profitably? Number one, you should have what we call your bias. So that means once you open the chart, the next thing that comes to your mind is, what trend is this? Which side is the dominant side, right? So, and the easiest way to know that is to look at for which structure did the market break recently. So the market broke the up structure. That means the market is going up. As simple as that. I think one of the big challenge in trading is because even though the market is going up, or the market, even though the bias is up, right? The market can still trade to the downside, and they'll say, but they said it's going up now. Why is it going down? Is because the market will need to offer discount price for it to have enough power to go up. As you can see, say it's an upward trend, but it's selling. You don't say it's selling. Once I catch you say the market is selling, what do you mean by selling? They say it's selling. It is not selling. The market is trying to offer discount price, right? It's all trying to offer this discount price. Say it's selling. So once you start saying at it's on upward trend, but it's selling, you would want to place a sell. Once you say he's selling, because that is what you're thinking, and as a man thinketh in his heart. Once you say he's selling, for example, see this long red candlestick right here. Once you see this candlestick going down, you tell yourself he's selling. Eh, remember, this candlestick lasted for 30 minutes, right? It's selling. So you place a sell, pakam, the market now takes the other direction. You don't tell yourself it's selling. The market is trying to offer discount price. So if your directional bias is up and the market is trying to offer discount price, your whole job is to wait until it trades up to a point where you can clearly see that this place is now in support. For example, this one now traded down up to this particular area, right? This particular area. So I'm trying to highlight the entire candlestick of the opening price, okay? Because the candlestick of that opening, the opening is actually a support and resistance, right? So if the price is trading above it, it becomes a support. For example, look carefully, you will notice that the price, what's that now? You will notice that the price is trading above it, right? Above it, above it, above it. So that means this is a support area. So if you watch, it came down right here and of course shoot up again, right? So this is another area again. This is another area. So all of these things you're seeing right here, they are what? They are support areas. So that means this market is right here, is bouncing on the support. So all of these shadow, you see, they are supports, right? So it means for me, I will still be looking out for opportunities to buy, right? Opportunities to buy because I'm trading what I'm seeing on the charts. Now, a lot of traders has been analyzing that the market will do a very big fall, right? Because it has been going up. Remember, it's trading around $2,752 per ounce. Can you imagine that? It has gone up very well. Now, most traders are already forecasting that gold will fall very well. Of course, that's the forecast, right? Now you are not to jump in thinking it will fall, so let me come in. Why it was around here, right? It was already too high because it's already 2.7. But guess what? It still climbed up more. So that's why I say you trade what you see on the chart. So that's why I say you trade what you see on the chart. You trade what you see on the chart. So Mr. AY, I think I can see your message there. Now you have an account officer, you can reach out to the account officer on that particular request, right? If you don't have an account officer, you can reach out to me. Okay. But I think everybody here have an account officer, okay? I know so. So that's my number there. You can reach out to me 09026264507. Emmanuel is my name, guys. So I think this is my number now. I've sent the number. So I think I'll not be able to analyze more instrument because I have some other I have an event, right? I have an event. So if you have friends and family that are in Benin, beautiful city, reach out to them. They should join us. Give them my number so that they can meet us in the hall, in the event hall. Guys, thank you very much. I'll try to round up for now. Thank you very much. Join us again tomorrow for another exciting section. Look out for buy opportunities still on gold, okay? Thank you, guys. Bye for now.